and foremost. Because to me, I've had the date in there. Okay, no problem. I put the accounts in here. That, I've got a cash account and a revenue account. Okay, even if I didn't have, this is all cash paid immediately, right? So they would have ignored that part, right? I would have had these two components to it. If I can make this a little bit bigger, cash and revenue, right? So those are my accounts. So now I got to figure out, okay, $800 worth of services. Is revenue a debit or a credit balance normally? And I'd have to think about it.
As a
Thankfully, I
credit.
know about it. It's a credit balance, right? Because it's an expense. And I might even, just for grins, I might say, okay, well, this is an expense account and this is an asset account, right? I might even have that as another sheet over here where I might throw in a sample chart of accounts, right? So I might say, okay, on my chart of accounts, good old acronym, right? My accounts, and my normal balance. So I'd always have little, at least for the work, what are these called? Smart sheet modules or the quizzes, because I know I can always use notes on either of those. I would have something to refer to all the time. And so I could say, okay, well, cash, and I can go down through the list and I can put down, okay, this is going to have a debit balance, right? Now, if I were even smarter, I'd go to a chart of accounts. I already did this, by the way. I'd go to Google and I'd type in chart of accounts and I'd get a sample listing of chart of accounts. And I'd find one that might be simple enough to cover everything, like this one right here, right? It says land, buildings, equipment, whatnot. And I have a preset set of chart of accounts and what their they call it nature of account, and I normal balance. And then I have this already, and I can just copy and paste it, and I'd be ready to go. So I never have to worry about that. But
I remember what my other acronym is.
Yeah.
It's CLR.
CLR.
So CLR stands for calcium, lime, and rust. It's a product that you use to remove those things. But the CLR are your common stocks, liabilities, and your revenues. And those all have normal credit balances.
There you go. Okay.
It's just something that works for me.
I might do this though, just so I have my little, because you won't be able to get away with that on all, and the acronyms will help a little bit. But and you might have in here insert, these are all type. These are all asset accounts. Okay. So I might build something like this, or I might find something like this and just use it over time. So I always know, okay, this is an account name, generally almost always used. This is the type of an account. It's an asset account, it's a liability account, it's an equity account, right? I have accounts payable. I'm going to shorten these. Liability, for example, and it's going to have a credit balance. I'm going to have common stock, and it's going to be a equity account, and it's going to have a normal credit balance. I'm going to have revenue, and it's called service revenue. And that's going to be a income statement account. And that's going to have a credit balance. And I might have something like salaries, expense. That's going to be income statement, and it's going to be a debit account, right? So I might have these lined up for me so I can always refer to them, and it'll make answering these questions back here, wherever they were, connect, no. Yeah, right here, no, continue assignment. So it'll make answering these questions a lot easier, right? Which of the following statements is correct? Okay. So anyway, that's what I would do on those types of questions. Any others, or would it be helpful for me to continue to walk through this?
No, but if I could make a suggestion, what you were just talking about with that spreadsheet.
Yeah.
It's great to be able to use it on the quizzes, but it's also a great tool to, on a daily basis, just kind of go over it to refresh yourself, especially as that exam date gets closer and closer.
Yeah. Yeah. Okay. Let's see. Well, before I do that, let me just go over, if you don't have any other questions, I'll just kind of check in here, see what we got. If there's anything in the reading that might shed some light on some stuff. So they can, see, you can look at all these. Brilliant. They have a short form kind of all of your accounts in each of these little drawers. Nice. Yeah. So you can take these little titles, these little descriptions right here and drop them into the Excel spreadsheet. You may not know the normal balance yet, but at least you can tell whether it's an asset, a liability, an equity. And remember, these are all like tangible, generally tangible things, except for patents that you own. That is yours. Liability is what you owe to others, and equity is what has been put into the business, or in the case of dividends, taken out of the business from stockholders or shareholders. And that kind of walks you through all those liability accounts, tells you what they are. Oh, and then this is maybe answers your question, Todd. It suggests that revenues are equity accounts, but remember, they're all just part of. Oh yeah, they do have revenues and expenses here as equity accounts. Interesting.
Yes.
Yeah, I wouldn't have necessarily classified it that way because, like I said, they get closed out and moved into a particular retained earnings account, and they don't really mention that in here. Where they do have it though. Where do they have it? Equity, retained earnings right here. See, so it's kind of misleading to some extent.
Yeah, but retained
That
earnings
revenues here.
also, don't they come off of your income statement?
No, no.
I'm
Well, you'll
sorry.
find
It's
you'll
not
find that
it's the statement of retained earnings.
statement of retained earnings includes net income, which is a composite of revenue and expenses, right? Your revenue minus your expenses. So while this is true to some degree, I wouldn't necessarily call them equity accounts. I would always call them income statement accounts, and then they would roll into retained earnings.
Okay.
Okay. But it does look like they may, I wonder what they do here when they accounts receivable, unearned revenue. Whoa. Wait, what was going on there? Okay. Sorry about that. I'm not sure what showed up there. So payables, revenue. Yeah, they only have asset, liability, equity accounts on this. They don't have revenue accounts in here. They have unearned revenue, but that's a liability account.
Well, your unearned revenue is something like a magazine subscription. You pay for the magazine subscription up front, but it isn't actually earned until the subscription is actually delivered to the client or to the customer, right?
That's correct. Yep.
Okay.
Everything that shows up in revenue is something that's been delivered, earned as of a particular period of time. Anything that's received in cash, usually anything that's received in cash, but for service to be performed in the future, that's unearned revenue.
Right.
And will be recognized, and you'll find that you'll learn this later on. It'll be recognized on the income statement when it's actually been delivered or when it's been earned. Debits, credits, we just went through these T accounts. We've got the double-sided entries to make everything kind of match up. Okay, let's see. Yeah, see, they're going to be testing normal balances quite a bit. You know, what's the account? So you have to figure out what, if it's an asset, liability, or equity, or revenue and expense, and then you determine whether it's a debit or a credit normal balance. In here, though, it doesn't show the contra accounts yet. So let's see if they show that in
I don't
here.
think the contra accounts come up until week 4.
Okay, so they're not here yet. They're just giving you the straight up easy stuff. Which contra accounts are actually easy too, but they're just a little brain twister if you're learning this for the first time. Journalizing transactions, balancing the account, posting journal entries, okay, and processing transactions. So this is your journal entry right here, where it gets posted in your T accounts, really in your ledger, which is a reflection of what's in your ledger. How you kind of keep tally and records. These are all great scenarios, right, of how things get recorded and where they show up on the accounts. On credit, this GR looks like he left. Did he leave? Looks like he did. Okay, so anyway, so these are great journal entries, right? I don't do so much of this analysis. I usually analyze later. You may identify, you may kind of figure out, I guess that's what they might call analyze, figure out what this all is, but I usually go straight to a journal entry to figure out how it should be recorded. And then you'll notice whether it's an increase to assets, equity, or liabilities. Yeah,
Can you
these
talk
are
a little
all,
bit about posting references?
yeah. So on here, they've got like, instead of a date, they have a reference on the journal entry, which is normal. You might have like a record entry or a reference entry on your journal. Like this might be called journal entry 21 or 12, right? Date is less important, although it is important when you're doing cutoffs for transactions and stuff. But in here, you would post the $300 or $3,000 to cash, right? And you would put a little posting entry there so you can reference back to it. And you do $3,000 to unearned consulting revenue. This is probably a deposit. Yeah. To unearned, yeah. And for $3,000, you need to put that same notation there. So you can always reference back to the original journal entry. So
So the
sometimes if you just put dates in here.
PR, is it that the PR number is a reference back to the journal?
Mm-hmm.
Okay. And the journal is what gets posted to the ledger.
That's correct.
Okay.
Yeah. Yeah, usually you'll have something like, if I have back to here, right? I have this journal entry right here. Oh, let's see. Right, I have this journal entry. Well, it'll also usually have a reference code, right? And like in one case, let's say it was 12. So then if I have my cash ledger and I have dates, I have reference, I have descriptions, I have usually debit or credit balance, then what you'll have this cash ledger, and copy this, this will be a revenue ledger, right? So just following the same logic on the other one, this would have a 1-2 reference, excuse me, date, reference of 12. Description, this was, what was this like? Payment or services rendered, let's say. Okay. So I would have something like this. And then I'd have on the cash side, I'd have an $800 amount there. On the ledger, on the revenue ledger, same thing, 1-2, reference of 12, same type of description, but usually this would be like services rendered to, yeah, services rendered to X, Y, Z co. That's probably a better description. Right. And then on this one, it'd have a credit of 800. So you keep on doing all these journal entries. They'd have a reference to date, accounts, and amounts. You put them into the appropriate ledgers, and then you roll up the ledgers at a particular time and see what the balances are. So that's what they're doing. And on the posting, this is a T account version of the ledger. but effectively acts the same. You can see the account number here and all the transactions. Eventually, let's see if they have that in here. Then they'll summarize, right? Summarize the transactions. You have all your accounts with the summary value, all of the other accounts with summary values. These all balance out. Now, I do see where they're putting revenue and expenses on the equity side, right? But this is a simple, this is a, what would this be?
It's the income
I
statement.
guess, yeah, that's why they highlighted all this, right? Accounts in this white area are on the income statement. They're really not on the balance sheet because they're just getting used to the idea that these revenue and expense accounts flow into equity. But in reality, they flow into equity into the retained earnings account of equity because it all gets summarized. And you'll learn that later on. Okay, prepare financial statements. This is the trial balance. So it's summarized into a trial balance. Make sure you're equal. And some of the potential errors that show up. This is where they talk about the retained statement of retained earnings, which flows into the balance sheet, or the retained earnings value flows into the balance sheet. Yeah. Okay. Let's see, and then you have your debt ratio. Pretty straightforward. Total liabilities over total assets. Okay, any other questions?
I do.
All right.
This goes back to week 2, chapter 1, question